Okay, so what we are going over in this episode, this is day one, episode one of the masterclass. This is going over all of the basics, okay? So what inspired me to create this is I get a lot of questions and a lot of people that both have a little bit of experience on the charts, no experience on the charts, maybe a lot of experience, but everyone just kind of wants to know how I view price, how I trade, how I see price, because I don't trade ICT, I don't trade smart money, I don't trade harmonics, I don't trade lunar cycles. I'm not really a part of a specific, I guess, community of trading. It's kind of like my own unique way of viewing the markets using data, using statistics, market structure, and liquidity. So this entire masterclass is so that way you can understand exactly how I view price, so that way if there's anybody that has any questions, I can push them to a recorded workshop and you can see all this, or you can also just see another way of viewing price. Because what I like to tell people and what I want to give you guys a bunch of context to and a big disclaimer is, one, I am not a financial advisor. Two, I'm not an expert trader. I'm not somebody that has claimed and will never claim to have just made $1 bazillion from these markets. I am a perfect trader. You will never hear me degrade a trading strategy. If anybody in here starts to degrade a strategy, I will ban you, block you, because it's goofy. You're just showing that you're inexperienced on the charts. Because guys, guess what? The fact of the matter is there's hundreds of ways to make money on the charts. Okay? There is no secret cult that has the answer. There's no secret key to the charts. There's no secret way to make money, and there's no best way to make money. Okay? But there are a lot of ways to make money, and there's a lot of different lenses that you can view the charts and view price. I'm showing you guys my way, and this is a way of being profitable, and this is a way of viewing the price, but you have to make sure to look at price in one singular lens. Am I telling you to join my cult, join my however I view price? No, but you have to stay consistent. Just like how I love to use the analogy, we as human beings can only see a certain amount of colors, right? A certain amount of colors on the Roy G. Biv, right? Everyone knows Roy G. Biv, all the different colors on the spectrum. If you as a human being going out your entire life has been used to seeing only Roy G. Biv, those specific colors on the color wheel, on the color spectrum, how crazy would it be if you woke up one morning and you were able to see colors that you've never been able to fathom before? Just like how there's other creatures on this world that has more colors on their spectrum that they can conceptualize with their eyes. They can see those, but we can't, right? And then some creatures we can see more than they can. So you would wake up and you'd think you're on this permanent acid trip. You'd be like, dude, what the heck is going on? How can I, you wouldn't know how to make reality. That's the same thing on why so many people are unprofitable on these charts, is because they can't decipher what reality is, because they're trying to view the markets from 20 million different lenses. You got people trying to trade ICT and blend it with this other way, and then trying to also do this and use indicators and use all these different patterns, and there's a cup and handle, and then blah, blah, and you get so infatuated and you get so just overwhelmed with how price is moving that you're just going all over the place. And I'm sure a lot of people here live and listening to this recording, you guys are all probably feeling the same thing. You're feeling this because at some point in your journey, everyone experiences this. Very few people, not including me, I've experienced this too, very few people go throughout their trading journey without trying to mesh like 20 bazillion different ways all together. Let me know in the chat who here sympathizes with that, right? I'm sure a lot of people here are coming to this Discord and they're like, dude, I'm sitting here trying to trade breakout and support and resistance while also adding 5 indicators to my chart, while also trying to find where the head and shoulders is, while also trying to find the order block and the fair value gap, break and structure mark, and you're just all over the place. And you're like, well, I don't want to take that long because there's a 1 hour fair value gap in the way of my take profit, and it's above the standard deviation of all the blah, 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 and you just go crazy. You're like, I can't even get a trade because I'm so stressed out. So the biggest thing I want you to take from this entire masterclass, this entire free course, I guess you could say, that I'm making for the entire public to see, is I want you to find peace on the charts. Whether that's from me, whether that's from the content that I create, or whether you find how I view price and it doesn't click with you and it motivates you to go somewhere else to find another lens that clicks with your psychology. That is the main goal that I want everyone to get from this, is to get a little bit closer to finding peace on the charts. Because So many people are trying to become profitable to get this ego-driven, oh, I'm funded, look at this, I'm funded. They're trying to do all these little dopamine hits, killing themselves, stressed out to no end on these charts, decreasing their lifespan because they're literally stressed over every single trade they take. So, what is the basics? What are we going over today? I'm showing you guys what is market structure. True, to the point, what is market structure? The only things you need in reading price. Now, I want to reiterate, this is not the way of reading price. This is the only things you need if you want to read price exactly how I do. Exactly how I do. I don't care about your fair value gaps. I don't care about your breaks of structures. I don't care about your market shifts. I don't care what the Dixie's doing. I don't care what the VIX is doing. I don't care about anything. This is everything. There is not one single thing I'm letting go of this entire masterclass and in today's episode that I am not using actively on these charts. I want to make that perfectly clear because I don't want people to ask, well, what about this? Everything I go over and view on these charts is what we're going to be going over. Market distribution. What is market distribution? How does that create structure? And how does price move on any asset? Because you hear this all the time being asked, right? What's the best time frame? What's the best asset? Does this strategy work with gold? Does this strategy... If you have to ask that, you're still not understanding the basics. So this should answer a lot of questions that I get. A lot of questions. I see Matsi says, yep, did it all. Steve says, yes, lots of different indicators. Chitaki says, my super optimized curve fit system was 6 indicators to be. Yeah, we don't have to keep on going. Yep. All right. So let me give you guys some context. So all price is, this is exactly how price moves. There is very few guarantees that the charts will provide you, okay? There's very few guarantees in the markets. But one thing I can guarantee you is price only moves higher highs, higher lows, lower highs, and consolidation. Price only moves in these 3 areas. And inside of these structures, within these structures, there's only 3 ways that price is distributed every single day in front of your eyes. I don't care what time frame you're looking at. The start, the directions to get there, and then the point B. Point A to point B, and how to get there from point A to point B is structure. That's it. I don't care what strategy you're using. I don't care what your favorite guru is telling you. I don't care who is trying to sell you a course. This is the only way price moves. Okay, the market moves to the path of least resistance. It goes from one market maker that's provided liquidity, and it travels to another major area that provides liquidity. And within that, creates structure, and within structure has data, and that is all you truly need when it comes to trading. It doesn't matter the time frame. It does not matter the asset. Price discovery, I want you to listen to this. Price discovery comes from liquidity, right? If price moves from liquidity, it's creating structure to get to another area of liquidity. That's it. We're playing ping pong. And depending on the time frame is how solid this liquidity is going to be, how respected this liquidity is going to be, and how strong this liquidity is going to be to get to another area of liquidity, to get to another area of people buying or selling. So if price discovery comes from liquidity, and liquidity comes from market movers, market makers, people that move the market, not you and I, but people that are actually has large amounts of money and they're moving this every single day, how do we know where these market movers are? Do we need like a million different indicators, some type of fancy study and case study, research, blah, blah, blah? No. It's 100% free in front of your eyes every single day. Liquidity footprints. Okay, you can call these whatever you want. I have not copyrighted this. I will not sue you for a royalty if you call them footprints as well. I don't know if they're actually called footprints in some fancy case study. I'm not taking credit for it, but this is what I call them. Footprints. These giant wicks, and again, I don't care what time frame you're looking at. I'm looking at the hourly because that is the time frame that I analyze price, because that is specific to my way of trading and my data, and we'll get into that in a later day of the week for the masterclass. But right now, all you need to understand is whatever time frame you're looking at, these impulsive wicks tell us a story. They tell us that when price was in this moment in time, I don't care what time frame you're on. In this moment in time, there was objective sell pressure if there's an impulsive wick on the top. And then vice versa, in a moment in time here, there was objective buy pressure. There was objective pressure that caused price, the buyers in the market, to snap this candle to create a void of liquidity, a footprint left behind, so that way when price comes back into that area, you most likely are going to see sell pressure. And look what happened right when it came back into this level. What happened? But are we blindly buying every single time a footprint is made? No. This is one piece of the puzzle. Because just like a large animal leaving a footprint on the ground, everyone would assume, whether you're an expert in zoology or animal history, what animals in general, everyone knows small from large, right? If you have a large footprint, you're like, dang, that's a big footprint. There's a huge animal around here. Or if you specifically know what an elephant footprint looks like, you're like, dude, there's an elephant around here somewhere. There's a large footprint. You know there's an animal somewhere in this area. So on the chart, they leave these footprints behind. We don't need to have any special technology to see. Objectively speaking, there is buy pressure here. Now, depending on the time frame, this will be indicative to how strong that pressure is. If you have a footprint on the 1 minute, it may hold the first tap and then, minutes later it'll break it. If you have a footprint on the 1 hour, it may cause stronger reactions and hold a bit longer, because if price breaks it, it'll cause even more aggressive breaking. Meaning, look at exactly what's happening. This is live price, right? I'm not cherry picking this. Here was a footprint right here. We came into this footprint, caused a strong reaction. We came back and melted through it. And what happened? Did we just kind of melt through it? No, we melted through it aggressively, because depending on the time frame, you're going to have different reactions. So this is truly all you need when you want to see the context of price, meaning you understand where price is going to go contextually. But this begs the question, well, how do we read price on, how they're going to react to these context areas? Now you get into point number 2, market structure. So now let's clear these little drawings here. And if we know now, if we can all agree, yes, this is going to be recorded, Mitch. So if we can all agree that the first start of the move, if we're on a road trip, okay, if we're taking a road trip to Las Vegas, and I start from Virginia Beach, okay, point A is Virginia Beach. Point B, the end result, is Las Vegas. Now I need to figure out how to get there. I need to know the directions. So market structure on the charts is the directions of where price went from one area of delivery, aka liquidity, and it's went to another area to be delivered, aka the end result, the next area of context, the next area where most likely price is going to go. Again, keep in mind, we're not fortune tellers. We're not predicting this. We're not sitting here thinking that we're God and we can just predict the markets, but we're using probabilities, because that's all we are as traders, is we use the best probabilities possible that's going to fuel our decisions on the charts. We never know what's going to happen. Guys, Nancy Pelosi is not my cousin, aunt. She's not my mom. She's not my grandma. I wish she was, but she's not. And until I can get Nancy Pelosi's trade specifically, I got to use to the best of my ability what the charts are going to give me, which is probabilities. Okay, so probabilities tell me that this level right here, this giant area, there's going to be sell pressure. And now we start to learn what market structure is. Okay, so market structure, there's only 3 ways that market structure is made. So let's go to this next little drawing that I created here. So market structure is only ever going to be created in higher highs, higher lows, or consolidation. This is the only way price moves. Price doesn't go into loop-de-loops, right? Price doesn't go back in time and forward in time and do loop-de-loops. Price doesn't do, I don't even know how to create another way for price to move, because it only does these 3 things. Even when I'm trying to make another way of moving, look, it's consolidating and then it breaks and it makes lower lows and lower highs. So what these tell you is higher highs, right? You're in a bullish market structure. You're in a bullish state of the market. And what's important in these higher highs is where these highs are coming from. Okay, so this low that's responsible for breaking this high that makes a new high, okay, this is an important low. And then vice versa, if a new low is formed that makes a new high, that's an important low. And until one of these important structures are broken, doesn't matter what the time frame is, you're still objectively bullish. And then, boom, what happens when one of these lows are broken? This low is broken. Okay, now we're starting to shift. Now we need another low and then lock it in and break another one. Boom. Okay, now we're bearish. But what also happens sometimes? What also happens is sometimes we consolidate. We're bullish, we're bullish, we're bullish, boom, and we start consolidating. We can't break this resistance. What is this? This consolidation is a form of either a continuation or a reversal of the previous trend. So if the previous trend is bullish, this consolidation is these higher market makers, right? They're saying, okay, do we want to go bullish now? Do we want to go bearish? Do we want to start taking profits from these buys? Or do we want to keep on buying and keep on going higher? That's what this consolidation is. It's a discovery. Where are we going to go? If we start breaking an important low, we may start shifting bearish. If we break that resistance and retest it, we may keep on going bullish, right? We may keep on just climbing bullish. But either way, structure is only going to be delivered from these three areas. And within these three different ways of price moving, there is a point A and a point B. There is an area where price is going to start. That's the catalyst. There's some sort of a buy pressure from a footprint, and it's going to go to the next area of context. Price likes to go where the path of least resistance. So that is how price goes and is transferred and is delivered from a context point to a context point. So now that we know that structure is starting to shift into one of two of these three important structures that gets broken, so meaning if you're bullish and an important low that created a new high gets broken, right, now you're starting to shift bearish. If you're in bearish market structure and a high that is starting to create a new low gets broken, now you're starting to maybe turn bullish, right? Now, most of the time, in the act of this shifting of price, consolidation usually forms. And so like if you just can't break a new high, if you can't break a new low, and you can see this on price all the time. I mean, we can see this just in today, right? We have right here a low, a high, a high. We had higher highs, okay? Consolidation. We broke a major level of support. We broke a level of support right here. Lower lows, right? It's never going to look perfect. It's never going to look like this most of the time, but that's still how price is going to be delivered from point A to point B and the directions to get there. So now putting all this together, if we know that liquidity footprints are the checkpoints or the catalyst of causing price to start creating structure to another area. And we also know while price is being driven to these areas, the structure the structure will never of how that price gets there. If we know that this is going to be the catalyst, if we know that we're going to objectively see sell pressure here, and this sell pressure may be the causation of this structure, what's the last point? The last point, the icing on the cake, is how do we know where point B is going to be? That leads us into the sauce, the beauty, the bread and butter of my strategy, how I trade, how everything comes together, and that's data, statistics, stuff that you can objectively quote, and no one can take that away from you. No one can argue with you that a statistic is true. If I can show you statistically proven backed resources, and this has happened objectively, not subjectively, then it's true, right? Like it's like a lot of these strategies that you guys see online, that you ladies and gentlemen see, some of them are very subjective, meaning like, well, I don't know if I want to take this fair value gap because this fair value gap is here and it's breaking this structure here. And I would take that one because there's so many subjective things about a lot of these strategies that you don't have any objective data to back up if those movements are actually going to be true and profitable. right? You just have, okay, well, I've seen this happen before. I want to take it. So how do we get that data? What is the data? There's hundreds of ways that you guys can build and find statistics, but I'm going to show you what I do, because I'm not going to show you and be a Swiss Army knife of trading. I'm going to show you exactly what I do. And then if what I do vibes with you, then you can practice it and back test it. If not, I'm glad you gave me a little bit of your time. So that's what I wrote down right here. The liquidity is the catalyst of the movement. The market structure is how the price is carried. And then the data is where the price is most likely going, aka start, journey, and end. Right? So when I joke, when you guys see me live trading on YouTube, and when I say, what more do you need? When I post a potential long setup, like if I'm like, okay, well, I'm going to take a long here. Where's my tool at? I'm going to take a long here and capture 25 points. Let's just act like this says 25. I'm going to take a long here. I don't know, man. I don't know. There's a high time frame bearish fair value gap in your way, and the Dixie's bullish on this one, and I don't know. The standard deviation is down here. I don't know if you should take that long. I don't care. Because one, I understand that I will be wrong sometimes. This is not a 100% bulletproof win rate, insert buzzword here, way of trading. There's none. Nobody is winning every single day on these markets. There is nobody collecting a 100% win rate every single day, 365, 5 days a week. There's none. So you have to let go of your ego telling you that I need to eliminate losses. Losses are a part of this game. That's why you see me put on my chart and preach this every single day on social media. I focus on what matters: psychology, discipline, and consistency. But Austin, the edge is what makes you money. Yes, but if you're not disciplined, if your mind is weak, and you don't show up every single day, win, loss, or flat, that edge is going to be useless. You're not going to get a single dollar from that edge because you can't even be disciplined to stick to something for a week. Right? The workout plan is going to get you sexy, but if you can't show up every single day to go to the gym, you ain't going to be sexy. Because it's your mind. You're undisciplined. You're weak. It's 2024 with a TikTok mentality. Everyone wants 20 seconds, 30 seconds. I can even almost guarantee you we're at 22 minutes of recording right now, and only 10% are going to watch it all the way to 22 minutes. The majority are going to watch maybe the first 10 minutes, and then they're going to get bored and go watch a 100% win rate strategy on YouTube and get scammed. They're going to go hop around from strategy to strategy to strategy 50 million times and still wonder why trading is so hard. Because what matters is the psychology, discipline, consistency. Letting go of the fact that there's billions of ways to not... there's millions of ways on these charts to not take this long. But if you only stick to one lens, one way of viewing the market, find out the start of where price is going to start the catalyst, find out how to read the journey, and then where price is most likely going to end up from a data statistically point of view that no one can argue with, an objective lens that is not subjective in the slightest. And you get a beautiful edge. You get a beautiful way of reading the markets. Which leads me to this little point right here. Where's it at? Where's my drawing? Right here. So this drawing right here represents the structure, right? Point A, point B, and how to get there. Now we take point A and we put a name to it. This is the liquidity. This is the footprints, the liquidity footprints. That's the catalyst. That is what started to have price move in a certain area. This is what caused price to want to have the motivation to move. We as day traders, well, at least me as a day trader, some of you may be swing traders, whatever, but me as a day trader, I don't care what's happening on the weekly time frame. I don't care what's happening on the monthly, the quarterly, the yearly, what the Dixie's doing. I don't care, because my average time in a trade is 48 minutes. I'm a day trader. I play the daily candle. I play the daily fluctuations of price. So why the heck do I need to waste a single ounce of brain power on anything higher than the hourly time frame? I need to know how an hourly candle is going to move. And I need to be a super good, like just I need to master that jab 1,000 times versus learn 1,000 different jabs. You guys have heard that probably a million times before. So in this market structure, I'm taking small little chunks of structure and I'm finding statistics around them, right? And that's the data. How can I be very proficient at finding where the catalyst is going to be, an area of time that has a high statistical probability, and then the point B, the end result, where price is going to be delivered. Now, there's hundreds of statistics out there, right? There's statistics all around your charts. Opening ranges, what I trade, midnight open retracements, AM, PM distributions, specific time interval flips. I mean, the statistics can be applied over a long period of time and measured wherever you're able to practically see price and turning points of price. But for me, and what I'm going to show you guys, is my midnight open retracement model. Why? Because that's exactly what I use. I'm not trying to sell you. In fact, the midnight snap, as you're seeing on my chart here, is completely free. If you don't have access to it yet, look in the links in the description of my videos on YouTube, and you'll see how to get this for free, 100% free, no upsells, no upcharges, anything like that. And you can see, objectively speaking, if I go to the hourly time frame, I can collect right instantly 1,108 days of data, meaning that's what this sessions means, 1,108 sessions. And in 1,108 sessions or days, which is around 2.8 years of data, almost 3 years, 66.5% of the time, we have retraced to the midnight open between the hours of 8 to 11:15. That's it. So from the hours of 8 to 11:15 a.m. Eastern Standard Time, we have a 66.5% chance. Now, what is this? Is this a fortune? Is this some magic 8-ball? No. All this is doing is this is reading where price is going to, like how many times out of all the times of the sessions that this indicator is reading, how many times did price come down and retrace this funny little line on the chart right here? And then it's giving you a percentage. That's it. And then it's breaking it down even further. And in every 1 hour candle, you're going to have 4 15-minute candles, right? So it's breaking every hourly candle that is whatever time interval you have here, and it's breaking it down into 15-minute segments. So on this chart here, it's showing me in the 30-minute interval, so from minute 30 to 44, before it gets to the 45-minute interval, to the end of the hourly candle, from minute 30 to 44, that is the highest statistical chance of this 66.5% chance. This is when, most of the time, the retracement is happening. Now, let's look and see what happens today. If I go to the 15-minute time frame, this fell right in line with the second most statistical chance, meaning from minute 0 to 14, so the top of the hour to the 14 minutes of that hourly candle, the first 14 minutes, we have a 26.36% chance, meaning the second most likely scenario is going to happen here. The first one's here, second one's here, and look what happened. At 10 o'clock, the first 15 minutes of the 10 o'clock hourly candle, we retraced to midnight open on a dime. Look what happened here. 8:30. We retraced to midnight open, the 30-minute interval of that hourly candle right there. 8 o'clock, right there. 10:15, out of statistic, but still retraced to midnight open and still fell in line with the statistic. 8 o'clock, right there. 8:30, right there. Right, you're seeing these statistics, 8 o'clock, right here. You're seeing this play out, 8 o'clock, time and time again. And when it doesn't retrace, the day after is even more likely. So if you see a day that doesn't retrace the midnight open between the hours of 8 to 11:15 a.m. EST, you have an even higher chance of retracing to that midnight open. Right? That's just how... that's just experience. I don't have a specific data point to show you, okay, out of this many sessions, but this is just experience. And once you guys backtest this, look at this, watch price over a year's time, you're going to see and understand exactly what I'm talking about if this vibes with you. 9:30, 30-minute interval. 8 o'clock, first 15-minute interval, right? I can show you this for days, 9:30, 9:30. So what you guys are seeing is the statistical probability being played out consistently, and this is real time. I'm not in backtest mode, cherry picking certain days. Today is the 15th of April. You can see right here the 15th of April to today's price action, and I just pulled out just the recent week, right? This is statistics. So now if I know going to the hourly time frame, let's put this all together. If I know that in any given day, and what's cool about this indicator is on the hourly time frame, you can go back in replay mode. So you can go to the main beginning of your chart, go into replay mode, drag it all the way back to the beginning, and then you'll get another 2.8 years of data. And then you can do that again, you get another 2.8 years of data. Now, depending on your TradingView subscription, that's how much data you'll be able to get. So if this number looks a little off, like because you have a cheaper subscription, I have the most expensive, the premium TradingView, so I get the most candlesticks. But you can literally use this replay mode, go to the beginning of your chart, and you can get 10 plus years of data in a matter of minutes using this. And in 10 plus years of data, this is objectively a 65 to 67% likelihood every single day, 65 to 67% of the time, you're going to have this retracement happening. So we know that the data, the end point, so going back to this, point B is 65 to 67% of the time. If I gave you a 65 to 67% odd of anything, you'd probably take that, right? That's a really good edge. That's a really good statistics over 10 years. Anybody in their right mind would take that. So now if you have a 65 to 67% chance of knowing where price is going to end up, that's the point B, the end result, that's Las Vegas, going from Virginia Beach to Las Vegas, that is the end result, the end goal, end location. And if, let's go back in time just today. So just in today at the start of the 8 o'clock session, where's our footprints? We have a footprint right here of objective sell pressure. We have a footprint right here of objective sell pressure. This is objective sell pressure. No one can argue with this. No one can say, well, I don't know. According to this, no, doesn't matter. Everyone sees the same wick. Everyone sees the same objective area that caused price to start selling off. No one can refute that. So now if we know on a 1 minute, when I drop down to the 1 minute time frame, if we know that once that candle starts coming back into this level, coming back into this area, that may be the catalyst for the sell-off. That may be where, okay, now I need to start looking for a reaction off of this footprint to get us to point B, to get us to the end result. So here's point A. So now let's drop to the 1 minute. And again, this is today. I didn't cherry pick a random day of the year that goes in line with exactly what I say. This is today, as of the recording of this video. And then what happens? Immediately at 8 o'clock, as soon as we come into this area, we reject. Let's see if we dig even more into it and look at exactly what happens. We come into this footprint and we reject. And now let's let the day play out. We come out of it. Where do we go? What's the next area? What did I tell you guys? When we come into this footprint and we close above it, when we melt through it from an hourly time frame, because the higher the time frame, the stronger the reaction or the breakout's going to be, most likely it's going to go to the next area of context, right? We're not just blindly selling off of a footprint, and we're not blindly buying off of a footprint. We're putting it all together. So all together, look at what happened here. We came up and we melted from this footprint, just like ping pong. We go from one area of context to the path of least resistance, and then price gets delivered to the next area of resistance. And now we're going to see, does this area become respected? Or do we melt through it, and do we go to the next area of context, which is all the way up here? That area gets respected. And then sure enough, at exactly 10:10, which is right in line with the data, 10:10, we come down and retrace market open off of liquidity. Liquidity was our catalyst. Structure told us when price was going to move in our favor. And the end result was the data that is telling us 65 to 67% of the time, that is going to be your end destination. That is going to be your Las Vegas. That is going to be the bread and butter of where price is most likely going to go. Now I take it one step further, because now if we have data telling us when price is going to have sell pressure, if we have statistics telling us where price is going to go at this point in time for today, it's going to go lower to midnight open, so that's number 2 for going down. And if we have reactions off of the footprints to create structure below the footprint, bearish structure, that's number 3. What else could I do to make it even more precise? Well, if I know that in any given one of these trades, because I've journaled, because I've studied this chart relentlessly, this is not for every asset. Please understand this. This is not a blanket statement for every asset known to man. This is NASDAQ specifically, because I have studied NASDAQ for years now. For NASDAQ specifically, I get a 25-point movement of price in my favor. I don't care what day of the week it is. I don't care if Santa Claus himself is coming from the North Pole to deliver presents. I don't care. I know that in any given day, any given movement, either if price is above midnight open or below midnight open, I can get 25 points from this market. And if you guys don't know the value of 25 points, that can retire you. Okay, look up MNQ and the dollar value associated with 1 point of price movement. Look up NASDAQ, the NQ, the regular contract, and how much a dollar of price movement is for 1 point. I trade MNQ, the micros, and this is plenty of movement. This is another area where beginner traders, new traders that don't respect treating this like a business, that don't focus on what matters, this is where they allow greed to get to them. And they're just like, okay, well, how can I get more? How can I get more? How can I get more? They're acting like an absolute gambling addict, acting like they're addicted to these charts, and they want more. I am happy with 25 points. I am happy with that. Now, obviously, this is the CFD of NASDAQ, okay? If we go to MNQ, but I already have all my drawings on here, so I don't want to delete them. Now, 25 points is 100 ticks on MNQ, but this is the CFD chart, so it's going to be a little bit different, but not much. But still, let's just act like this is MNQ for demonstration purposes. There's different ways that you can attack this, right? For me, because I have a proprietary tool that is specific to the way I read price, meaning leptokurtic distributions. It's a very fancy word for we as traders. Every price delivery, I don't care if you trade support and resistance, ICT, smart money, everywhere price delivers, there is a leptokurtic distribution, meaning there is a peak of distribution where most of the distribution is created. There is a catalyst, there's an outlier, and then there's another outlier. Okay, we as day traders, we want to get in here. We want to get in at the earliest part of distribution before price is distributed, and then we either get to our target profit or we get to our stop loss. Right? This is how price moves. Every time frame, every asset, whatever. That's how price moves. It's moved in a distribution. It's math. It's basic math. So, well, it's not basic math, but it's math. So, if I know that price moves in a leptokurtic distribution fashion, I created an indicator. Now, this is the only thing that the general public does not have access to. You can take trades and dollar cost average off of footprints and do 25 points. You can take single entry trades, but you have to be okay with the fact that you're going to have a lower win rate. If you don't understand any of that, you can go watch my other videos. I don't want to break specifically into this strategy specifically because we're going to do that in a whole nother video, a whole nother workshop day. But if you want to use this, you can join my pack trade group, but again, you do not need it. I want to make that very perfectly abundantly clear. You do not need my indicator, the entry aid, the wolf in the wolf suite. You do not need this to be successful. I am not selling success behind a paywall. But if you want to join a group, because this is my Discord, and I will plug it because it has been very beneficial to many people here, and there's a lot of pack traders here. If you want to join the pack trade group, the link is in the description of my YouTube videos. If you're here watching this live, I will share the link after this, or you can check the welcome page. Everyone gets sent a link when they join the Discord. You get access to this with your membership. You get access to my entry aid. This shows you the leptokurtic distribution of where price is going to go. This is how I trade this. So today, the only trades that I will never take is off of news candles and 930 candles. So we had two distributions here at 8:30 and at 9:30, but I didn't take that because that's a news candle and a market open candle. So the only candle that actually presented itself was this one right here. I went short right there. 25 points, 100 ticks, done. Done for the day. Right? This was literally like a 20-second take profit, done for the day. But Austin, what happens after that? What happens after the retracement? Do you take? No, I'm done for the day. Half the battle in trading, ladies and gentlemen, is once you have a strategy, is knowing when to be done for the day. Take your profits and be done. We as traders, we ironically, we want to trade for financial freedom, but then we become a slave to the charts. Ironically, we become glued to the charts, right? So it's something that you have to make sure you understand deep down, that you have to stop trading. Once you extract value from the markets, once you beat the statistic that is 70 to 80 to 90% of the people fail at trading, once you beat that statistic for the day, be on the winning side of that statistic. Be done. You're done. Because I can't tell you how many people, when I released this strategy, when I made a video and published it, so many people, the most common question isn't about the strategy. The most common question was, what do you do after the retracement happens? What about after you get a full take profit? I'm done. I don't need to trade anymore. So the biggest thing that I want you guys to get, putting all of this together. So if I go back to my little drawings here, where's my drawings? Did they delete? Oh, because I'm on the 1 minute. There we go. Okay, so putting all of this together now, if we know the catalyst of price, if we know how price moves, market structure, if we know where price is most likely going to go, data. What data does is it eliminates the best, quote unquote, the best, anything given to you. It eliminates what's the best time frame. It eliminates what's the best fair value gap. It eliminates what's the best order block. What's the best support and resistance breakout pattern? What's the best pattern? Is it the cup and handle? Is it the ascending triangle? Is it when the RSI is overbought? What is the best? Data eliminates all of that because data doesn't lie. Data is statistically telling you if you do this every single day, you're going to have this edge. You're going to have a certain amount of edge. And then you don't need to think of anything else. The data thinks for you. The data does the thinking. Then liquidity, this right here, right? The liquidity, the catalyst, liquidity eliminates the best area on the chart where to buy or sell because everything has the same footprints on the chart showing you where objectively to buy and sell. Okay, and we don't take every single footprint, right? Just because there's a footprint being created, we're not just blindly buying and selling. We're adding that footprint, that catalyst, into a specific moment of time on the chart that the statistics play on our side, and we're aiming for a certain area that the statistics are going to give us an edge in, right? I'm not just blindly selling off of every liquidity footprint. I'm selling off of footprints of liquidity that is going to get me to the midnight open between the hours of 8 to 11:15. And I'm buying off of footprints if we're below midnight open from the hours of 8 to 11:15, because the statistics give me that edge, right? There's no best order block. There's no best area of where price is going to objectively go because the catalyst is there already in combination with the data. And then the last part is market structure. Market structure eliminates the best, quote unquote, way to time the entries because everyone has the same higher highs, everyone has the same higher lows that everyone can see, and when an important area on the chart is either broken, continued, it's too objective, right? Everyone has that objective data on the chart. No one can refute with that. There's no best break of highs or the best breaks of lows. They're just broken. And when a low is broken, a new low is formed, you're bearish. When a high is broken and a new high is formed, you're bullish. When there's even highs and even lows, you're consolidating. Everyone has the same data on the chart. So putting all of this together, that is your basics. That is your bread and butter. That is the only way, objectively speaking, that you need to read price, to learn how price moves, to see where price is going to most likely go next, to see how price is going to move to your price target or to your stop loss or to a potential entry. That is objectively everything you need. You don't need, okay, well, can I add a fair value gap on top of it? Can I add a this and that and this and that? That is when you get down the rabbit hole of reducing the accuracy and increasing the overall complexity of something you don't need to have complexity to, right? Have you guys seen all those funny videos? And again, I'm not downing a strategy. I'm not downing people that do this, but I'm sure everyone here has seen all those fancy videos on the 1 minute time frame, speed lapsed, where they're drawing 20 different things. Oh, this was a break-in structure right here, and then they annotate it, and then, okay, we're bullish here, let me annotate that, and then we're doing this, and there's this trend line here, and then we're consolidating here, and then we break structure, and they draw all these different things, but they don't take a single trade. They have like 20,000 different grocery lists, check boxes, to take one single trade as a day trader. I have 3. I wait for the time, I wait for the liquidity, and the data tells me and does the thinking for me. That's it. And I don't need anything else on the charts. So what I want you guys to do from watching this video, or if you're sitting here live watching this right now, is go practice this yourself. Don't believe me. Don't take my word for it. After this, go put in the chart work and see this for yourself. If you want to test specifically NASDAQ, go look up NASDAQ. But don't, again, be a two-dimensional thinker. Okay, Austin said 8 to 11.15, and this works for all assets. No. What I said was this is the basics, but you have to go do the research on what's the best time interval that gives you the best probability of whatever asset. And then you take that and find the footprints. And then you take that and find the structure. And then you take that and put it all together for that specific asset. So that is the basics, ladies and gentlemen. Do we have any questions at all? Either you can drop them in the trading circle, or give me some feedback, because this is the first time I've done like a major like just week-long workshop. Give me some feedback if I've done everything good, if you actually learned, got some value from this. If I could do something better, if I could have done it a better way, announced it a better way, teached it a better way, taught it a better way, whatever. Give me some feedback in the chat there. Ed says he loved it. Thank you. Anya says, let's go, day 1. It's 2 a.m. my local time. Nice. Cup of coffee, trying to get sexy from the unsexy. Bro, Anya's killing it. Anya's killing it. Get some sleep after this, Anya. Earthwalker says, thanks, man. I'm learning. Nice. Chris George, great info to trade without emotions. And that's, dude, Chris George. And look, Chris George is a pack member. His name's Purple. You can't make this up. Right? Great info to trade without emotions. Emotions, this is the crazy thing with trading. We all can agree that emotions create the worst possible decisions. Whether you're super happy, whether you're super sad, whether you're depressed, you're angry, you're frustrated, whatever. We can all agree as human beings, take trading out of it, we all can agree that emotions is what gives us the worst possible outcomes and decisions. And we can also agree on the flip side of that, the yin to the yang, that logical decisions are the best outcomes. We can all agree to that. You don't have to be a finance expert, trading expert, business expert. If you ask the basic Joe or Jane off the side of the street, do you think logical or emotional decisions give the best outcomes? Everyone's going to say logical. So why are we bringing emotion into the chart? Why are we bringing a single ounce of human emotion if we know that human emotions are the biggest crutch in any decision? Why are we making business decisions on the charts that create the flaws that we objectively understand? Right? So I have created a way to look at the markets in the most objective, emotionless, and peaceful way possible, so that way you can have peace on the charts. So that way you can wake up every single morning, sip your coffee, listen to some music, have a good time, and if you're in the pack trade group, we're sitting joking about God knows what every single day, talking about what matters, reading price, having psychology lessons every single day from what price is giving us and the trades that we take, and we're just having a good time. At not one point in almost a year of running the pack trade group, and I have pack traders in here, tell me if I'm lying, not one point in any trade, and we've taken hundreds, if not thousands of trades in the year, was I stressed? Was I like, oh my God, I'm in drawdown. Oh my God, I took a loss. Oh, my stop loss got hit, guys. Because I know that the data over a long period of time, no matter how I attack these markets, it's going to take care of me. If I stick to positive risk management, if I'm disciplined to my model, and if I show up every single day, the math is going to take care of me, just like the math takes care of me on the charts every single day with the statistics. Thank you, Austin. Kapapulu, absolutely, you're welcome. Amco, thanks, very good, nice. Thank you so much for the feedback. Thank you, seriously, guys, thank you so much for giving me feedback in the chat, because, again, this is my first time doing this, so I only become better if you tell me if what I'm doing is good or bad. Mitch, thank you, Austin. We'll go back and rewatch without screaming at the kids. No, you're good, bro. You're good. Anya, bro, I believe you. I back-tested it with gold, and like you know, I've been killing it. See, dude, look, listen to Anya. Bro, Anya, been killing it. Killing it with gold. I don't trade gold. I don't like gold. I hate gold. But he makes money with it. Steve O'Mate. Emotions suck with trading totally. I know what things are happening logically, but don't have the trade I know I should. Thanks, Austin. Having peace on the charts is the goal. Dude, that's why I implore all of you to look at this. Just give it a chance. Let go of your ego. What I ask of you is, if you're still unprofitable and you're here watching this, the recording, or here live, if you're unprofitable, just let go of your ego. Delete all the bullcrap indicators. Delete all the bullcrap nonsense you're drawing on the charts, and just give this a chance for a month. What's a month? I'm not asking you 4 years of your life. I'm not even asking you to give me a single dollar. Just go try this for a month and see if you find a little bit more peace on the charts, and you actually are like, holy crap, price is consistently giving me what I'm looking for. I'm not promising you returns. I'm not guaranteeing you returns. I'm just saying, give this a try. We go to school, we go to college for 4 years and go into tremendous amounts of debt. But people don't want to try trading one singular way of the markets for a month. Mind blown. What brokerage do you have for beginners? Well, I trade with prop firms, but a brokerage that I'm trading live cash with is Liquid FX. I'm not affiliated with any of them. Go check them out. But I mean, I don't really know if there's a beginner or an advanced. Like, they're all the same thing. They're all brokers. So if you're a beginner, I would recommend go demo trade. Right? If you're a beginner and you're asking me where to go trade live capital, you've already started off on the wrong foot. You need to go demo trade. You need to practice for 6 months to a year. You need to back test like your life depends on it. And you don't even need to be touching live capital until you have the basics built down. You are disciplined. You can stick to a model and you can stay consistent. I tell people this all the time. Why in the world would you go to take a driving test? If you're 16, 15 years old, learning how to drive a car, would you go and learn how to drive the car in your driving test? Would you sit down, buckle your seatbelt, instructor gets in the seat to grade you, and you're like, okay, how do I do my turn signal? I was hoping I could just learn how to drive this car in the driving test so I could pass the test. You would fail miserably, right? But in trading, what happens? Because it looks easy, because you're just clicking buttons, people think they have this skewed reality that trading is just this magical concept that's totally different from every other reality when it's actually all the same. And they're trying to learn how to drive the car in the test. They're trying to trade live capital while learning how to trade. They're trying to pass a prop firm account while still learning how to trade. Go learn how to trade. Learn how to trade. Learn how to operate the vehicle. Learn how to take the test. When you go to take a test, you're not learning the material in the test, right? You're not getting tested in a prop firm to see if you can learn in the test. You're being tested in the prop firm challenge to be challenged on what you know. True, Austin, last week we took a loss and we were so happy. Yeah, we were on a 14-win streak. And I was like, thank God I finally lost. I can trade some more accounts. Could you please explain again your setting of the indicator and what time and touches row mean on your indicator? Yeah, so the settings are 8 to 11:15. Again, this is the time frame specifically for MNQ, okay? If you try to just blindly put this on any asset, you got to find the data for your asset, okay? So 8 to 11:15, right? Open hour is midnight, which would be 0 hour. And these rows, what they're showing you is here's an hourly candle, okay? Let's just say this is 1 hour. In this 1 hour, there's 15 minutes. There's 4 15-minute increments. Okay, so let's take this and split it in half. Take that. Split it in half again. There we go. All right. Okay, so in this hourly candle, there's 4 15-minute chunks, right? 15 times 4 is 60. 60 minutes, 15 minutes. So if I have a start time of 8 and an end time of 11:15, that's what? 8, 9, 10, 11. That's 3 1-hour candles. Okay, so the 8 o'clock candle, well, you can even look right here. 8 o'clock candle, 9 o'clock candle, 10 o'clock, part of the, not really an 11 o'clock because it's 11:15. So really you only have 3 1-hour candles in this moment of time. Okay? And what this chart is showing you is within those 3 hours, what increment on the 15-minute time, like in 15-minute increments, what part of that hourly candle is going to most likely retrace in that statistic of 66%. So within 65 to 67% of the time, over 10 plus years of data, where we retrace to that midnight open, in that data, even more specifically, the 30 minutes to 44 minutes and 0 to 14 minutes. So the opening of that 1-hour candle in one of these candles, the opening or the 30 minutes to 44 minutes, so the third 15-minute candle, that is the most likelihood scenario of when we're going to retrace to that midnight open in one of these two. Okay, does that make sense? Does that answer your question? Anya, kindly share the link to join the Pack Trade Group. Yes. So if you want to join the Pack Trade Group, again, you do not need to join the Pack Trade Group for success. But if you want access to my indicator, if you want to surround yourself with like-minded people, if you want to surround yourself with people that really want this long-term, and you don't want to be around gamblers and people trading 20 million different strategies, and you have no idea how the heck to even look at the charts because everyone in the voice chat's looking at 20 billion different things. If you want to surround yourself with people that really want this, and because you are who you surround yourself with, the Pack Trade Group is why I created that, right? And I live trade Tuesday through Thursday. So I live trade on Monday on my YouTube channel for everyone to see. Then Tuesday through Thursday, I live trade with my Pack Trade Group. So 4 days a week, I'm trading in front of it, putting my practice where my mouth is, putting my money where my mouth is. I'm practicing what I'm preaching. Unlike 99% of these gurus out there selling you something, I'm doing exactly what I'm saying. And so it's not a copy trading service. It's not a trading signal service. It's an area where you can see, okay, is Austin doing, okay, am I learning? Okay, I'm seeing him apply this. Okay, how can I apply this? I'm seeing him talk about psychology. How can I apply this to myself? Like you're surrounding yourself, you're bouncing ideas off each other, you're back testing. We do private workshops. We do private back testing sessions all the time, if not almost daily at this point. So that's my little plug there. Came in late. Did you talk about where the stop loss would be? Well, I didn't talk specifically about the strategy in this video, and I will not be talking about it in this video. You got to go watch the following days of the workshop. I didn't break down the strategy specifically. I just showed how I use the data to apply my trading. I didn't show the specific strategy because that's in another day. Cue the people leaving. Oh my God, I didn't see a strategy. Oh my God. You need to learn the basics first. But where demo? Every brokerage has a demo, Earthwalker. Just go YouTube, how to open a demo brokerage account. Such a great analogy with the car versus trading. Yes. I'm the king of analogies, okay? Yes, I do use a stop loss. And I already have videos out there. You don't have to wait on me. There's already 3, 4, 5 live stream backtesting sessions on my YouTube channel. There's videos that I've made covering my strategy, how I use my stop loss, how I get into trades, how I do all of that. It's already there on my YouTube. You can go watch that too. Okay, I'm going to stop the recording now.